The topic for today's discussion, I would say discussion because it will be a two-way thing. Once I complete my presentation, we can have question and answer and further discussion. Financial metamorphosis of anesthesiologist, right? It's a need of an hour that we should educate ourselves financially because being anesthesiologist, as I have been working prior, I used to do freelancing, then government job, everything. So the money which we receive, that is too less compared to other fraternities. But this we should keep in mind that we have other ways to compensate that and be financially free. So we should have some additional income and we should be able to create the wealth. Okay. So first of all, disclaimer, I am not a SEBI registered investment advisor at present or financial planner, and I will be discussing what I have learned over years about finances. Do consult your financial advisor before any investment decision. So what is financial metamorphosis? So we all know that metamorphosis is transformation from an immature form to an adult form. Today, we need a financial metamorphosis. We need to move from an immature person when it comes to our mindset about money. It's about mindset about money and not about how much we earn, right? And become a financially mature person. So this is the most important image, I would say, in today's presentation. If we are able to understand this and work towards this, then it will be beneficial for all of us. So this is a cash flow quadrant I have taken from Robert Kiyosaki's book, Cash Flow Quadrant, right? So it has 4 quadrants. On the left side, we have employee, right? Then on the right side, we have businessman. On the downside, on left, we have self-employed, and the downside, on the right, we have investors. So employee means it comes to salaried person, right? So if you closely observe, the people who fall on this left side of the quadrant, self-employed means we all doctors, anesthesiologists, lawyers, etc. all they fall on the left side. So we have limitation of our earning. There will be ceiling in our earning. As an anesthesiologist freelancer, I would say on an average, anesthesiologist can do maybe 5-6 surgeries, right? Few people may go to 10-11 surgeries max. But that is our ceiling, right? You cannot go beyond that. But salaried person though, we should not talk because the salaries is fixed and all the expenses which the salaried people do, they will be post-tax, right? So double taxation also comes here. So we are either in this or this category being anesthesiologists, either salaried in some corporate hospital, medical colleges, or self-employed as a freelancers, or you may have your own hospital. But when it comes to right side business, do you think that as a business owner, the person needs to be present actively at that working place? No. But if freelancer is not working, he is not earning. Right? If he is not working, he is not earning. Cannot think of taking 1 month leave and go on a tour. But that's not true for businessmen. What business people do? Business people employ other people. They purchase time of other people and make them work on fixed salary and they enjoy perks. Right? So we should try to be on right side of this quadrant, but is it possible for everyone to be a businessman? No, practically not possible. It is going to be difficult. There are a lot of nitty-gritties in the business development, then marketing, sales, right? Maintenance, everything comes in there. So the easiest way of being on the right side of quadrant is be an, I would say, smart investor, right? If we become smart investor, what we are doing? We are not employing any employee, but we are employing our money, right? In fact, employees, you have 8-hour shift, 48 hours per week. There is limitation for that. But this money which you have employed will be working 24 hours for us, right? And the most important employee money will make us financially free and we need not worry about doing what we say, stressful practice, right? So like many of us, we have to do some things like keep a pulse oximeter on the bedside. When a night call comes, we attach it to our cell finger, right? So that to say that I don't want to come indirectly, right? So these things need not be done if you are smart investor. So our aim in today's session, I would say, is to identify what are the possible ways of being on the right side of quadrant. So prerequisite for starting any smart investor is we should be adequately protected. We should know how much are our expenses. Then we should have clear goal settings and we should be able to calculate future money required for achieving those goals. So when it comes to protection, what do I mean by protection? Protection means you should be adequately insured. What are the various insurance? First is life insurance, right? It should be at least 14x of your annual income. Then health insurance. Most times we ignore this. Being doctors, anesthesiologists, we say that we have lot of friends here and we need not have it, but the expenses can be very big, right? Then next is indemnity insurance. Then all other asset insurance. So protection, then you should be able to calculate your expenses. When it comes to investment options, there are various investment options. First and foremost is cash, keeping at home. That's the most dreadful investment, I would say. Your value of your money kept at home becomes negative year after year. Second is saving account. It gives you 2.5 to 4% ROI. That does not even beat the inflation. Fixed deposit barely meets inflation, but again, tax is there on that. Then precious metals. This is one of the good investment, gold, silver, right? Next is real estate. So the old school is more into real estate investment, but why? Because affordability and the size or purchase ability was there. But in today's era, if you want to buy a piece of land, it's very difficult because big amount is needed for that, right? So it's not possible for each and everyone, but there are smart ways of doing it. Then mutual funds, debt mutual funds like liquid funds and other short-term debt mutual funds. Then hybrid mutual funds, equity mutual funds like direct mutual funds and direct shares. So these are the various ways. So we will be today focusing on this equity investment. So various investment and their returns. So if you see LIC endowment policy, if 10,000 is invested and expected rate of return is 6%, right? Total amount invested is 36 lakh and the person after 30 years, he will be getting 1 CR, right? So ROI is 6%. FD 8%. It's difficult. Only senior citizens get this rate. 36 lakh will become 1.5 CR. The worst mutual funds have given around 12%. So 36 lakh will become 3.5 CR. Average mutual funds have given 7 CR. Good mutual funds have given up to 14 CR, right? At rate of 18% CAGR, right? Compounded annual growth rate. Then direct shares, there is actually no upper limit. Why I say like this? So next slide will show you certain stocks like CAGR, you can see 39, 33, 32, right? So the amount will be beyond imagination. So the common question comes in mind that these list which we are seeing is of only good stocks. What about bad stocks? So that will also be seen going ahead. So the importance of starting early should not be forgotten by us. If we see this example, Ajay started at age of 25 years, invested 10,000 for 30 years. So he started earlier, 36 lakh invested. At rate of 12% ROI, he will be getting 3.5 CR after 30 years, right? Arun starts at 35, invest 15,000 for 20 years. Same amount invested, but he will get only 1.5 CR. Abhi started at 45, invest 30,000 because he is earning more. So he says instead of investing 10,000, I'll start investing 30,000. So I'll match this 36 lakh. But he will be getting only 70 lakh at age of 55 years, right? When he thinks of retirement. So starting early, we get benefit of compounding, right? This should not be forgotten. Then diversification of investment. So the simplest formula is 100 minus age. So percentage of saving amount should go in equity. So if someone's age is 40, then 100 minus 40 is equal to 60. So whatever amount is left for saving, what is the amount left for saving? That is total income minus expenses. Whatever amount left is called as saving, amount left for saving. Out of this, if this is 100, out of that 60 rupees should be going in equities. Out of that 50% directly into shares and 50% through the mutual funds. So that we can get stability via mutual funds as well as growth via direct stocks. Other options are PPF, then gold, specifically paper gold. Arbitrage funds are there. Liquid funds are to be used if we have lump sum amount for investment. So before making any investment, make sure we have 6 months of expenses in saving account or in liquid form. So liquid form can be physical gold also, right? If you have physical gold or gold bar, even in the midnight, you can give it to someone and take the cash against that. So it is as good as money. So earning additional income with the help of equity, there are many ways of making money from stock market. Trading, intraday, positional, long-term, then futures and options, leveraged asset class. This is the most riskiest thing and many people fall prey to, especially the beginners as well as expert people many times fall into the trap. Then long-term investment in stocks and mutual funds. So these mutual funds can be in the form of SIP or lump sum investment. Then direct stock market investment, we should know fundamental analysis and technical analysis. If you want to learn all the fundamental analysis and technical analysis, it would take you 10 years plus. Why? Because there are so many ratios and fundamental things. You have to read the balance sheet, etc. It will be complicated. So all this is under fundamental analysis. Same applies with technical analysis. Many things are there which will give confusion to us or make us confused. There are many indicators available. So the most common myth which we see is we are doctors or anesthesiologists and we cannot understand finances. So I will stick to FD and purchasing plots, right? So this is the myth that we do not understand. We are the cream of society, right? We became doctors, then we did our post-graduation, we became anesthesiologists. Definitely, once we decide that I want to learn something, I want to know something, then we can do that, right? So our aim is make your money work for you when you sleep, right? So peaceful sleep is important, 7-8 hours sleep, and that will be possible only if you are financially free or you are acting towards your goal of becoming financially free. So as I told, bad investments. So I started in 2007 and 8. 2007, 2008 investing in stock market. Sensex that time was 18,000. I invested in these stocks. I opened a demat account, right? I invested in these stocks. So for example, like I have taken here that I invested 8,000. As I had 40,000 in my account, my salary was 28,000 that time. And today's value is 600 of that investment, right? It became 8K in 6 months. I was expecting that my 40,000 will become 80,000, but it became 8,000 within 6 months. And Sensex was 12,000. Today Sensex now even has, this is the old slide, Sensex has increased, but still the value is lesser than this, right? So even if we consider this, that 40,000 invested in this stock, let's consider this has become zero. But what about the upside of the stocks? Upside is unlimited. Downside is limited to 100% amount invested in that stock. So when you are choosing a stock, how to choose stock, that I will be discussing today. So I was missing definitely something. Since 2009 to 12, I would say 3 years I studied stock market, various ways. Then 12 to 15, I struggled further. And from 2015, it has been good. So the simplest thing is we miss is what is our requirement as a human being in today's era, right? Roti, kapda, makan, right? This was basic requirement, right? When in the olden time, I would say. Now, along with this, you need gadgets, travel options, luxury, or holidays. So, the biggest problem which is there for us as a Indian is population, right? But I consider this as strength for taking the decision for my investment, right? 120, 140 crore people, what are their needs which will fall in this? Find those, find the stocks which have higher market share. Market share means if 100 cars are sold, out of them, how many are of Maruti, how many of Hyundai, how many of Kia, etc. Right? And find the top ones and invest in them. So in 2009, I purchased Rids, right? Maruti Rids I purchased and I was driving. I enjoyed driving that car. And it came to my notice that time 70 to 80% people had Maruti cars as their first car. Then they would upgrade to some other Hyundai cars, etc. Right? So I checked, the rate of one stock was around 953. I purchased this in by paying 5.25 lakh Rids that time, and I invested 52,000 in Maruti. Right? And in 2015, I sold my Rids for 2.3 lakh and I sold my Maruti share at 5.2 lakh because this 953 stock went to 10,000. So in fact, I used the car for 6 years and I got additional this much profit, I would say, and my all money is back free of cost. So you can see here around 900 purchased in 2011, sorry, not 9, and sold at 10,000. Today, then when in COVID it came around 4,500, 5,000, again reinvested in it. Today's rate is around, I guess, 14, 15,000 something. Then next is Fevicol. Anyone here who hasn't used product? So Fevicol, this, as a kids we use this, but once you construct the home or your house or do interior, you come to know that there is lot more we need for our home. We pay a lot of money to this company, right? So same way, investment in that stock around 70 to 73. Today's rate is even higher, right? These are the slides taken. Then anyone here who hasn't had Maggie or has not taken Nescafe? No one. Absolutely, there will be 0%. I am sure of that. So invested in Nestle because 120 crore out of 120 crore, even if 20 crore people are going to use the products of the company, it is going to be worthwhile. So invested at 1500, today's value is around, I would say, 20k something, right? Next, DMart. I am sure at least 30% of us are doing shopping in DMart. And how I decided to invest in this? There was one DMart here in Chhatrapati Sambhajinagar at near TV Center. But when the IPO came, I heard that new DMart is coming in Garkheda area near Shanurmiya Dargah. So when a company starts the store, second store in same city, that means obviously they are making profits, right? So invested around after IPO, because I don't apply IPOs. So around 650 invested and today's value is, I guess, above 4,000 something, right? Same way, kids love Domino's pizzas. Specific brands and specific pizzas they love. So around 700 and today's value, I would say it would be around 2,400. This is heat and bonuses, etc. This was prior to that. Same way, anyone here who hasn't taken any product of this company, Good Day, right? Tiger Biscuits, Rusk or Mari, right? And we were paying 10 rupees, 5 rupees, 15 rupees, 10 rupees like this. But now we are paying 50 rupees for Nutri Choice. They were taking out the fiber from this and giving us this at 10 rupees. Now they are not taking it out and giving it at 50 rupees, right? So we are in fact paying more to this company. So it is a no-brainer investment company which has completed 100 plus years in the Indian market. Around 145, today's value is 4,800, 5,000 something. Same way, Whirlpool, right? When we passed out, one of my senior friend was getting married. So he asked me, come to purchase a fridge. So we went to an electronic store. We saw the values were around 16,000, 18,000, 12,000 likewise. And the cheapest one was Whirlpool around 10, 12,000. So we asked why this is cheap. Is this a bad company? No, he says it's a new company, but it's a good company. And I did a indirect market share analysis there. आपके यहाँ पे सबसे ज्यादा कौन से बिकते हैं? He said obviously sir, Whirlpool same features है and getting at much cheaper rate. So people take that. So that gave me that good company with same features with good market share. And you won't believe the price of that company was around 30 rupees one share. And today's value is around 2000, 1800, 2000, right? It went up to 2500. So if we see here, same example, we invested in that Suzlon, R Power, Reliance Capital, everything 8,000, 40,000 invested there. Same way invested in these 8,000. What is the percent of return you can see? In those, even if we are 50% of time correct, right? If 1, 2, 3, 4, 5, 6, 7, 8. So minus 800%. In those 8 stocks, they become zero. If consider we are too bad at selection. And you can see the total average return is 1600, 39%. So 1639 minus 800 is 839% return in a matter of 12, 15 years. Who is going to give us? Which mutual fund, which FD, which real estate investment? No one can give such huge returns, right? Because maximum risk involved there is 100% amount invested. So this is the 40,000 is maximum risk. And what we have gained in the remaining, so our in short 80,000 became 64,000. So what went wrong here? The best wrong thing which I identified was debt on the company, right? So we have to only look for debt equity ratio of the company. Find the stocks based on your usage. What you do since you get up in the morning from the bed till you go to the bed in the night, you will find definitely 25 plus companies in your home, out of which 30% of population will be using similar companies' products, right? So those are your investment stocks. Out of those stocks, you apply single filter, debt equity ratio, right? So if you see Suzlon debt equity ratio was 9.5, that means if their value was 1 rupee, debt on them was 9.5 rupees. So 9 times the debt of the valuation of the company. Same way, if you see Asian Paints debt equity ratio was 0.00. So it's negligible, because we have seen in COVID period, many hospitals also were closed, which were started newly, because there were no patients, no one was going out, and that led to closure of the. Why? Because they were having debt and they had to repay the debt amount, huge debts. So the companies which don't have debt, they have a flexibility and cash at hand, so they can sustain the bear periods in the business cycle, because it comes every 8 to 12 years, bad phase, or we can say recession is likely to come. So only single criteria that you must be using that product, or your friends and family should be using that product for minimum of 5+ years, right? And second thing is debt equity ratio should be as near as 0. These are the only 2 things we need to analyze for our benefit. So there are various things: price action analysis, Fibonacci ratio, harmonic, conventional price action, point and figure, GAN, Elevate. We have various indicators. We won't be going because we don't need for investment or to become financially free. Then Hippocratic oath. As a doctor, we all take that. So what it says, early intervention is important. Do not wait till it's emergency. No shortcuts to the success, and should be ready to work hard or study hard. So most rewarding skill for a trader should be ability to deal with uncertain live market conditions, to be prepared for unexpected surprises, developing the right skills and mindset to take the right decision in a split of second. Who is better than an anesthesiologist in doing this, right? We deal with, you can change this live OT table conditions. right? We are prepared for unexpected complications, and we have right skills and mindset to take the right decision in split of seconds, right? So we are the best people, or I would say most forward in case of managing such situations. So we should be more better in financial investments and trading, whatever you decide to achieve financial freedom. So no wonder then that anesthesiologist can be very successful in trading and investing in stock market. And when it comes to mutual funds, there are basically large cap mutual funds, mid cap, and small cap mutual funds. If we don't want to separate it into it, best is flexi cap mutual funds, where the fund manager is given the rights to decide how much he wants to invest in mid, large, and small cap, right? So the best investments are, for me, if you ask personally, if someone don't want to go into directly into stocks, best is go and find good flexi cap mutual funds for the investment. Then we have seen the smart investment. There is a term called as smart expenses, right? Because there is no point we just keep on doing investment and we are not enjoying that. We are just working, investing. Even if your net become 100 CR, khali haath aaye the, khali haath jayenge, right? So we should also enjoy our life. There should be expenses which we should do smart. Small daily routine, like if you consider fuel, being freelancer, we spend lot money on fuel, especially if it's a petrol or diesel car and not a hybrid or EV. Do you know there are some cards, credit cards, which can give you fuel points up to 8.5%. Means if you spend 10K, out of that 8.5% you will get return. So in short, what you are doing, you are enjoying the ride plus you are saving money. Directly it's as good as you are earning it return. There are certain ways to make your holidays or hotel bookings at a discount of 30 to 36% as well. There are smart ways of doing expenses or investment plus expenses. Like if you take example, in Bali, I stayed in a 3-bedroom sea-facing private pool villa. The price was 1.3 lakh per night. I stayed there for 7 nights. And how much I paid? I paid only 10,000. Now in next week also, I am going to Goa. The listed price per night is 1 lakh for that resort for a 2 BHK villa. And how much I am paying? I am going for 4 nights. How much I will be paying? I will be paying 5,000. So these are smart expenses. We have to just be little vigilant, give our little time. If you reduce our time on Facebook, Insta, if we are able to delete these apps from our mobiles, we can enjoy this such things, because there are lot more things. I would say it can be another topic, maybe some other, maybe after 6 months or next year, we can discuss only on smart expenses. So to summarize, I recommend becoming educated in financial securities, which is feeling confident about your job or whatever profession we are into, feeling confident about your ability to invest in good and bad times. Focus your education on financial freedom, read, study, take classes, attend seminars, find a good coach and take control of your financial destiny. So, thank you.